we have a problem. Everything new is actually, might be, something old that pretending to be that new to skirt some regulations. There's a big debate. Is prediction market actually just part of the gambling market, or the gambling market it is? There's a ton of debates about which one is which and what is the difference. And if you go and look at all of this stuff, people are like, oh, but there's a pricing on it, and there's a single party, which is a house, versus a bunch of party that you're betting against, blah, 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 blah. Everything is about the regulatory framework. In my life, dealing with a bunch of businesses, being in private equity and venture capital back in the day, for the past 15 years working with different technology companies, the name of the game is how do you maximize your growth potential and continue to grow your revenue with minimizing your costs, especially those costs that do not directly help you with the revenue. And one of them is the cost to maintain regulatory approval for your activities. So, gambling market, very tough. We've had a lot of drama around it up until recently, when slowly states started to allow online gambling and other different gambling venues, casinos. Like New York just approved a bunch of casinos for New York City metropolitan area that's coming up in the next 3 to 4 years. So people kind of warming up to this, but how can you jack up the steroids in that thing and send it even further up? And this is where people realize oh, wait a minute, I can call it prediction markets, and I can let people predict the outcome of different things across, who's going to wear what kind of outfit for this kind of event. The Gatorade's going to be blue or red. The person's going to say this word 3 times or 5 times. There's a lot of different ways now by which people can lose their money. And I don't want to make it seem like I have a crusade against gambling, because it's not the first video I make where I'm very clearly negative on gambling, and it's terrible. It ruins life. It's going to ruin a lot of lives in the United States. The bankruptcies are up. The delinquencies are up. There's a lot of issues with it, right? I already dove into this before. But what I wanted to tell you is that this whitewashing of the term just to avoid regulatory approval, especially in the tech world, is nothing new. And it's not about the gambling itself. Buy now, pay later. The fame of maybe the past, before gambling in prediction markets is hot right now. A year earlier, buy now, pay later was everything. And people were talking about it before they realized how terrible it is. And delinquencies are up, and the banks are now in liquidity issues that they want to talk about. And the Federal Reserve in the United States issuing $40 billion in weekly, I think, buybacks of treasuries just to inject the funds and do the quantitative easing, but they're not calling it quantitative easing because they want to scare the market, all because people don't have money. They don't have money to pay on their credit cards. They don't have money to pay on their buy now, pay later. But long story short, when you use a credit card, you buy something now, you pay on that fee later. Back in 1800s, when you take out the credit from the store or the banker, you buy something now, you pay for it later. So Klarna, Affirm, all of these companies over here, Afterpay, they did not invent a new category. They invented a new name for the same type of transaction to skirt the regulation. Because when it comes to kind of this whole conversation about why would they do that, regulation takes money, takes time. You have to maintain certain rates of liquidity. You have to go through certain levels of approval. You have to hire very expensive attorneys, tax consultants, accountants, all sorts of investments. Where instead, you can call yourself a technology company and you can say, I'm a tech company. I'm not really a credit card company. I just happen to let people get access to the line of funding to buy something right now and pay for that line of funding later. And I'm going to, by the way, charge them the interest rate. But by the way, it's not the same interest rate as a credit card, although it's calculated and essentially managed the same way. And by the way, I'm also going to charge the fee off of the store that allows its buyers to use it. But hey, just because credit card companies do that, I'm not just doing it because they're doing it. I'm, my own thing. Just what annoys me about this is that a lot of these technology companies like to say, hey, we know it walks like a duck, it quacks like a duck, but it's a peacock. And you can see this beyond, again, we have buy now, pay later, which is credit cards, prediction markets, which is reality, just gambling, and it's all whitewashing. fintech companies like to do that a couple of years ago. So before Klarna and all of those companies got hot on the fintech market was like exploding, and a lot of these companies like Chime and the others came up, and they were all like, "Hey, hold up. We'll let people store money with us. We'll let people put the direct deposit with us. We'll let people even open the credit line with us, but we're not a bank. Nope, we're a technology company that just provides this service. Don't look at us as a bank." The reason being, to start a bank, there is a lot of things you need to do to actually qualify to be a bank. The biggest one, you need to have capital requirements of anywhere between 20 to 30 million dollars just to start, just to have a business that's actually a new bank. Where if you are a tech company that just provides financial services, you can start it in one of these things. So no wonder then you have this whitewashing fight against, oh, I'm not this, I'm that. And don't get me wrong, like regulatory environment, regulations are there for the right reasons, right? Like if we know people cannot drive on this road above 30 miles an hour, 50 kilometers an hour, we should put a sign out there, and we should find people who go above that speed limit because it's a risk for their life. There's a turn coming up and they're not gonna make this turn if they're going faster, whatever, right? Makes total sense. But at the same time, a regulatory environment in the business sense cannot be limiting to the growth of that industry. And my problem with a lot of these examples, right, because it's very popular with these kind of like more complex, especially kind of like companies that deal with financial questions and impact financial well-being of individuals, is that there's a lot of regulations for a reason. They're trying to protect the customers from the bad actors. They're trying to protect the customers who might not be financially educated enough. Easy for me to talk about those things because I have 2 different degrees specifically in this space, right? So I really understand the environment, but I know that I'm unique in that sense. I have a lot of friends to whom the concept of a credit card, how credit card works, is alien. And you can laugh all you want, but there are plenty of people out there who think, hey, it's okay for me to carry a balance on a credit card and just pay a minimal amount. That's fine. I'm not wasting anything. And no one teaches them the whole concept of the interest rates and how that just keeps piling on and on and on. And a $10,000 debt at a certain rate, they might be paying 3 times over before they're done, right? Instead of just cutting the expenses elsewhere or using their savings, if they have them, just killing off that debt and using the rest of the money to go invest somewhere, right? So there's a lot of potential to abuse those individuals because of their lack of understanding of how these tools work. And this is where you see the outcome. When it comes to gambling and prediction markets, there's now a lot of issues with the financial stability for those people, especially in the current economic environment where people are desperate. The chance of winning hundreds of thousands of dollars on a bet, what song gonna play in a title and whatever socks the person will wear on the field, gives them a glimpse of hope in the world where they cannot find a job, they're not sure they're gonna ever own a home, maybe they live with their parents right now, they cannot afford the basic things that the prior generations were able to afford. They are ripe and ready for those companies to be taken advantage of. And so regulations are a good thing there because they would hopefully protect them against it. But if you call yourself a prediction company, all of a sudden you can skirt all of this and you can squeeze those individuals of every single dollar they have for the sake of shareholder value. When it comes to buy now, pay later, again, you want to fill up that cup and you want to maximize the amount of debt you put on them so they feel like they can own things that they cannot afford by just making that monthly payment that was broken out in 48 parts just for them to have that thing that, again, maybe the prior generation could afford much easier. Same with some of these fintech companies, right? They provide the services and want to make sure people can bank with them and they offer them all sorts of things, but at the end of the day, they're not regulated as well as the banks. They don't have as much of a cash balance requirements to make sure that they can offer liquidity. They can go down and all of a sudden the government has to bail them out because a bunch of people are left with their savings pretty much locked in at the company that's going bankrupt, right? There's so much risk for the individuals and users of those apps, right, of those technology companies. And this is where regulations are important. I think that there's a balance there, right? Like we need to find a place where the consumers are safe and they get the services that they deserve at the prices that they deserve. These companies can grow, their innovation can happen, but we cannot let the greed take over and just whitewash this terminology just for the sake of yet another dollar for the shareholders instead of taking care of the individuals out there. So, complex topic, but from the perspective of you, something to learn from all of this is that don't be sold on the idea that just a new label and something that looks flashy and investors get excited about is just the next great thing. Because maybe, just maybe, it's something very complex and old and fairly regulated that someone is trying to skirt around. I'll see you next Saturday. Peace.